Hey, I'm Jason Balin with HardMoneyBankers.com, and welcome to another great expert interview. My guest today is Josh Weidman from Turnkey Philly. Josh is an expert at turnkey investments. And what we talk about on the show today is he's going to break down exactly what a turnkey investment is. But it's really interesting because Josh has a lot of experience with flipping properties, wholesaling, managing constructions, managing tenants, leasing, raising capital, and things like that. And he turned this into a turnkey operation, which is actually a very popular topic. You probably heard the term turnkey. So in a second, Josh is going to explain to you exactly what turnkey investing is, but it's great for any active real estate investor who likes all the aspects of real estate investing currently, and they want to kind of incorporate them as a strategy to invest in real estate. The other side of this is if you want to get a good return on a rental property and you're a passive investor, maybe you have access to capital of your own or somebody else's, or you can get bank money for some of these deals. He goes over a few strategies that he does related to the properties that he has set up in his turnkey model, where you get 20% built-in equity and a very passive investment model. So please help me welcome Josh to the show. What's up, Josh? Welcome to the show.
Jason, thanks for having me. I'm loving being here.
Absolutely. So the reason why I want to bring Josh on the show today was because Josh was able to combine many different skill sets that he has in real estate and actually start a turnkey rental business. He's going to tell you a little bit about what exactly a turnkey business is in a second and exactly how the operation is set up. But he has the ability to market and find deals. He has the ability to execute on construction, leasing, managing, finding capital. There's so many different sides of that turnkey business. That's why it's very intriguing. So what I want to do is if you could just kind of break down the aspects of exactly what a turnkey investing model is. We're gonna go through that, and all the listeners, all the viewers are gonna clearly understand exactly what the turnkey model is so they can learn about your operation. But first, Josh, why don't you start off by just telling everybody a little bit about yourself and how you got into real estate?
Yeah, absolutely. Okay, so I've known Jason for quite some time. We've got involved in some of our first real estate deals together about my goodness, what was it, December 2006?
Yeah, probably about that.
Yeah, something like that. It was a while ago. Long story short, I got involved in real estate, something I wanted to do since I was about 16. I bought the Carlton Sheets No Money Down system off of TV, read through it, took the course, threw it in the back of my closet, and then forgot about it. Went to college, went through a couple things, and got to a point in my life where I had a choice to make on what I wanted to do moving forward. And so I figured, you know what? I always wanted to get involved with real estate, and jumped in with both feet. Tried to flip some houses, bought at the wrong time at the wrong numbers, and ended up, without any capital, with a really good opportunity from an ex-employee of mine selling a house. Got a great deal on that. Ended up making $30,000 in the wholesale fee, and that was my hook into real estate. Spent several years learning how to wholesale and building a business around wholesaling. That led to building a property management company. And then, flipping properties along the way, dealing with contractors and building a rental portfolio, rehabbing and flipping houses. And ultimately, I realized that there was kind of this hole in the market. It's not even true. It's not even a hole in the market, but there was a really interesting product in the market where, you had investors that were looking to invest in real estate, but didn't have the time, didn't have the want to really get in and learn all of the pieces to put it together for these long-term holds, for the cash flow properties. And so the idea behind a turnkey investment is to put together all the pieces, finding discounted properties, renovating them enough so that, you're going to get the best return on your investment, keep long-term expenses down, but not overly, renovate them so that you're not going to make an income. Finding good tenants, managing the property, and just putting it all together into a model where someone can invest in real estate like they invest in a mutual fund.
Yeah, I was going to ask that as my next question is, tell everybody a little bit about how a turnkey investment works. I'm sure people have heard the word turnkey. The banner sitting behind you says Turnkey Philly. There's a lot of turnkey operations throughout the country, and I think it's been a popular business model on a lot of different things. On one side, if you're the operator like yourself, you have the ability to package these turnkey investments. And the other side, there could be an investor who, may want a slightly more passive approach to real estate investing, and maybe we'll talk about that as well in a second. But it attracts them to buy that product. So you kind of said a little bit what a turnkey real estate deal is. Who's your target client of these types of properties, and kind of walk us through the process a little bit about how it works.
Well, let me say too, there's two different types of products that can be turned turnkey. Okay, you've got the finished product that you end up. There are several companies out there that sell a product that's completely renovated. It's got a tenant already in place, and on day one you're getting cash flow. That is one model for turnkey, so that they end up managing it, but they're giving you something that already is going to have a return. Oftentimes, the investor is going to be putting 20% of the purchase price down and financing the rest of the property. Another model, and the model that my company is really run with, is that we take all the pieces, we put them together along the process. It takes a little bit more time to be cash flow positive, but what we're able to provide to our clients is immediate equity in the property, which you usually don't get with that fully renovated property. So our process looks like this. I mean, we work with people that have anywhere from about $70,000 to $120,000 in cash at their disposal for one investment. Our target market are properties that are worth about $85,000 up to about $125,000. Now with the market, sometimes we're a little bit beyond that on our after repair value. But we're looking for our clients to be all into the property, including closing costs, holding costs, and all that kind of stuff, with anywhere from $20,000 to $30,000 in equity in the properties. And then we're investing in areas that have good cash flow, so that they're going to realize anywhere from 10 to 12% on a cap rate, and then once they refinance and take their money out of the property, they're seeing anywhere from 20 to 30% returns.
So is this for somebody who has the money to buy this in cash, or is there financing involved?
Well, there's different options. I mean, it depends on the product that you're buying. I know with our product, with our turnkey product, because the limiting factor for our growth has been the contractors. I mean, to be very frank, that has been like we're relying on a third party to come in and be able to execute on the construction end consistently, give a consistent product in a consistent time frame. And so we've been limited to say maybe 5 or 6 units on a monthly basis to be able to with the contractors that we currently have. With that said, our demand is beyond the 5 or 6 units, so we've kind of geared down and targeted on clients that are looking for multiple properties that have the financial liquid assets, and they can buy in cash, fund the construction, and then refinance after that.
Got it. Okay, so I think to sum up what you're saying is, they're paying you for the construction because most real estate investors hate construction, and it's a hard part to manage that. So what you're saying is, well, we have more demand than we have supply, and because we really want to make sure these deals are executed correctly.
Yeah.
It's hard for us to do more than 5 at a time, because it's hard for us to manage the construction on 5 at a time, and
that's right.
We want to make sure they have a good product. So because of that, maybe you can cherry pick some of these deals a little bit better, or you cherry pick the deals plus cherry pick your buyers of these deals, and It just happens that most of your buyers are paying cash because hey, it's a cleaner transaction if it's cash. They don't need to get a hard money lender to fund the front end and then contingent on a bank on the back end. They're looking to park capital into this investment vehicle, and they're doing it as cash. So not to say you can't run a turnkey business straight finance, that's financed to everything in your case, because you have more, you're trying to keep it boutique, whatever the term is, five at a time until you grow to a higher level. It just happens to be that most of your buyers are paying cash.
That's right. And I actually I have one client right now that has committed to purchasing about 20 properties over the next year, and he's using hard money. It's part of his investment plan, but he's got enough cash at hand so that if the lender is unable to close in the time frame that we need, he's able to step in, buy the property, and use the hard money as a refinance tool. So I mean, there's options there for financing, but just in general, having cash on hand, it provides an awful lot more opportunity for our clients, and just in general, to be able to go out and get a nice investment at a discount.
are your clients active investors as well, or do you think they're just passive, that they want to make a good rate of return, they don't want to deal with any of the headaches, they already have full-time jobs, and they just want to own rental properties without dealing with anything?
It's a great question. So I would say we've had the most success with people that want to have a hands-off investment. I've certainly sold properties and done projects with people that are a little bit more hands-on. But that's our job. Our job is to be the hands-on part of the project. And when you have too many, what do they say? Too many Indian chiefs and not enough Indians, or something like that. But that's what ends up happening is you got too many hands directing the project, and it's not always great. So I mean, ideally, I'm looking for someone that is either close to Philadelphia or far from Philadelphia, but is looking for hands-off. They want, a lot of my clients are work on Wall Street. Or they're in California where they can't seem to get the kind of returns that they're looking for. And I've got quite a few clients that are right in Philadelphia. They're professionals. They've got businesses and things that they're looking for a certain rate of return on their money. They like real estate. They see what's happening in the city, and they don't have the time or energy, or they don't really want to be involved with all of the hands-on, the hands-on production that has to go on with getting a deal ready to go.
Got it. So, in order to do this type of business, tell us a little bit about your operation. I mean, where do you spend the majority of your time focused? Where do you find deals on the front end for this? I mean, there's a lot of moving pieces. Think about an entire real estate transaction from start to finish. There's marketing to find deals. There's managing contractors, managing the property, leasing the property, helping them, setting up financing on the back end, I guess, if they're paying cash. So the capital component makes it a little bit easier, but walk us through what you spend your day on and a little bit more about the operation, where you're finding these deals and things like that.
So my allotment of time has changed a lot over the last 12 months. Going into 2016, I had a construction manager that had been with me for a couple of years, who was managing a lot of the construction. My focus was a lot more on attracting new clients. Things have changed an awful lot in the last 12 months for a number of different reasons. So from the front end of the transaction, we get leads from a bunch of different places. Our own marketing. I have an acquisitions agent that goes out, evaluates properties, negotiates, and closes deals on that end. The vast majority of our properties are coming from wholesalers. And I have something like 150 wholesalers that are in our pool of people that are sending me deals at any given time, and I have an acquisition person that they just deal with the wholesale leads. Anything that seems to fit our model, they're going to go out. We do a comprehensive checklist of all of the repairs that need to be made on the property. We've got a couple different ways that we're evaluating the houses, that we've got to meet our certain profit margins that, obviously throughout the project. And then from there, we're making offers and negotiating with these wholesalers. It's a really good situation. I mean, I've found, at least from the flips that I do, that are my own personal stuff, it's been a really great thing to develop relationships with these wholesalers, because a lot of times, they're spending, it's allowed me to really reduce the cost per deal and the cost per lead. Because even though I'm paying them, let's say $5,000 or $10,000 or $15,000 on a project as a wholesale fee, I don't have that huge overhead of continually $5,000, $10,000, $15,000 a month in direct mail or online marketing. So I've got leads coming from both my own marketing and from other wholesalers. We evaluate the properties. Once we have something that looks like it fits our model, it's the right neighborhood, the right amount of renovations and the right financials, we've got buyers that are waiting for those deals. So on my end, I'm interacting with potential clients. We go through and we do first a 15-minute needs analysis call where we determine, number one, are they the right fit personality-wise and financially for our product, and give them a brief overview so we make sure that we have what they're looking for. From there, we'll do a 1-hour call where it's a very in-depth overview of exactly what our product looks like. The neighborhoods that we are working in, the renovations that we do on every property, the financials, so that I've had successful and not successful relationships with clients, and ultimately what I've found is that the successful clients all understand the product that we're providing. They know what kind of numbers they should expect. They understand the renovations, the whole process, so that at the end of the day, when we deliver that product to them, they love it. It's different when somebody doesn't know what they're getting. So long story short, once we go through that, we have our clients actually put in an order for a property, and within 30 days, we provide them with one property or two or three, depending on what they're looking for, and kind of refine the offering. So let's say, no, go ahead, Jason. Sorry to cut you off.
These are all these aren't getting done ahead of time and then sold after. They're not your inventory that you're doing all the work, you're putting up the money, getting them rent ready, and then selling them. Like they're going down this entire journey with you, meaning like,
that's right.
Cool, well the sales price is going to be $50,000, maybe you make a little bit of money on your end, on the front end. The construction is going to be $25,000, maybe you're going to make a little money on that end, then I'm going to manage it for you, I'm going to lease it for you. So they're going through this, they're the owner of the entire time they go through the process. Okay.
That's exactly right.
Hey, yeah.
So
let me ask you a question. Do you think if you floated money and got it to the end, you could sell it for a higher amount? Meaning like they're all in at 80 right now.
Sure.
And they take the risk along the way, but if you took the risk and then you sold it to them for $5,000 or $10,000 higher, I'm just curious.
Well, no, it's interesting. I just took on I don't want to say a partner, but I had an investor that they put up money because they're overseas and they want to sell a finished product. Okay, so essentially, he's putting up all the money for us to buy, renovate, and lease these properties. And once they're leased, he's reselling them at 100% of value. And it's great on my end because there's.
So he's doing that. You're not involved in that back end, but it doesn't matter because
because we own the property. We end up splitting the profit on the back end, and he gets and we're paying him a small percentage
based off his capital. Okay.
Exactly. So I mean, there's a big upside to it. And yeah, I do think we can get more money in that way. However, I've done this before where, in fact, you guys funded a loan for us where we did this. We renovated and ended up, by the time we sold the property, we made about the same amount of money, but we had capital tied up in this thing for
fair.
We probably should.
Yeah, and you got risk. You have risk. You got capital tied up. I'm just curious for those watching.
Sure.
You can go both routes if you want to. What do you think's one thing you're lacking in your business right now that, like, if you could just wave a magic wand, you'd be, would appear? Just one thing. Is it an employee, a skill set?
The thing that I think we're lacking the most is competence in contracting on a large scale. Like I said, 5 or 6 units a month, we can execute on. You get to 7, and now we're only producing at 5. If you, I find that, I told you my what I do on a day-to-day basis has changed significantly over the last year. For the last 4 months, I've spent an awful lot of time involved in our construction process. My plan in the first quarter of 2017 is to hire a construction manager that I'm going to spend 3 to 6 months to train so that they know exactly what I'm expecting from them, the processes that are involved, and somebody that I know I can trust. I've been spending a lot of time in the field making sure that I can define in my own mind exactly what I can expect and how to evaluate new contractors, hiring the right people and training them. And I'm finally to the point where I can kind of back off on that. But to snap my fingers, I'd like 20 contractors. 20 contractors I can trust. And honestly, I think everybody in the industry would say that about contractors.
Yeah, no, scalability is hard in every business. I think people think it's very, very easy that, hey, you do one, just do the same thing, then it equals 2. And that does equal, and that does work to some level, but then it gets to the point that, it's very challenging. And that's why a lot of businesses stay somewhat stagnant. And they say, we've been here, and like, this is where we want to be at, and this is where we stay at, and it makes a lot of sense. So what do you think kind of the end goal is? Let's just call it your 5. We're all pretty good at setting good goals that end up becoming true because we grind and we take action and we hit our goals. But
sure.
Like, what's the game plan? The 5 or 10 years? Is it to continue to do this? Obviously, it's a fee-based business, right? So
sure.
Obviously, it's one of those things, you owning these properties, let's say you did this, you acquired properties
Yeah.
for yourself instead of doing this for somebody else,
Mm-hmm.
you'd make less money today, but those would have a hell of a lot of worth in the future. But in
Sure.
this particular case, you're making the bulk of money today, but in order to continue to grow, you got to continue to do deals.
Sure.
Like, what's your game plan for a 5 or 10 year goal?
There's
this?
two goals that I'm looking for in 5 or 10 year period. Number one, there's one specific neighborhood in Philadelphia that I think has a ton of upside potential. And right now, if you look at the neighborhood and look at the values in the neighborhood, you'd say that it's overpriced. Okay, and it's brewery town in Philadelphia. Half the houses are board ups or tear downs. Like it's very bipolar. You've got brand new construction, you've got mess properties. However, it's the last undeveloped neighborhood close to Center City. Everything else is, almost mature. Okay, so there's a lot of upside here. I'm looking to buy, both with myself and my clients, a couple blocks of just shells, board ups, whatever, and begin to renovate them. And for each one that I sell to a client, I'd like to acquire one myself, so that in 5 years, in 10 years, you've got property values at $300,000 or $400,000 for these properties that they're cash flowing like crazy until then. There's a big demand for nice housing in the neighborhood, and it's just a unique neighborhood. That's one goal. The second goal that I have is I'd like to develop, get more into developing in neighborhoods. Doing things like condo conversions, doing ground up construction. One of my goals for the first quarter of 2017 is to do my first ground up new construction project. It's kind of cool to look at the different opportunities there. And I look at Turnkey Philly as really an investment company. And the people that I'm working with are people that have capital available to them, whether they're buying rental properties or they're investing in possibly a fund or something like that to do a 12-unit apartment building, ground up construction on a 12-unit apartment building in an up and coming neighborhood that today might cash flow and 10 years from now might be quite a lot more valuable.
Sure.
That's the kind of thing that I'd like to pursue in the next decade.
Makes sense. So when you picture your retirement, are you the type of guy that's going to be grind? I'm never freaking retirement. I'm just going to, be in my office and do my thing and grind until I die? Or are you more of like, I've got a lot of assets, I've got a passive income, I'm out, like, bye, I'm gone. Like, what would you say are you? And, I've asked this question to a lot of different entrepreneurs in different industries, and I've got similar responses, so I'm really curious to see what yours is.
You and I have talked about, kind of doing less deals and making more money. We've had that discussion before, and I have a hard time sitting around. It was really difficult for me. My ideal retirement is not, to sit on a pile of money and go and sit on a beach somewhere. That would last for like 2 weeks, and then my wife would want to kill me probably. What I'd really like to focus on, though, especially now, I got young kids. I have 3 young kids. The oldest is 7, the youngest is 2. I've been trying to focus on spending more time in the moment and taking time to go and spend with them. So as I look forward to retirement, I think it's more of a lifestyle change than a stop working change. It's more. I'll feel like I'm retired when my focus is spending time with my kids and my family more so than going out and being part of that daily grind. But I don't think I'll ever stop working until I'm dead. I
sure. Cool. I
do.
That's typically the response that most entrepreneurs have. So I'm not. I was just curious. So if you want to get a little bit more information from Josh, like what's a good place to find you? What's your phone number, an email address, a website? Like
Absolutely. If you go to turnkeyphilly.com, we've got a couple videos on there with an overview of our program. We've got some pictures and things and sample investments of projects we've done. You can also schedule an appointment there for to start the 15-minute call, get an overview of our process and our program. Or you can call our office at 267 507-7055. Don't even know the number, no. But turnkeyphilly.com is the best way to go. There's a lot of information there. Look us up on Facebook.
No, I appreciate it. And for everyone who's watching today, I want to go over real quick a few key takeaways of what we've learned, because I do believe that this business, or part of what Josh talked about in Turnkey, is right for you if you're in a few different places inside your thing. So obviously it's a great strategy for all real estate investors who know real estate and they love being involved in many aspects related to it. There's a bunch of different income streams related to running a turnkey business yourself. Or on the other side, it's a great vehicle if you're a passive investor and you just want to own properties, but you don't want to deal with all the headaches related to that. And some deals may work one way and some deals may work another way. It's a good strategy that I like. And to be honest, we're very active real estate investors, and even turnkey deals are good for people like us. I'm looking to buy passive investment deals. Our numbers locally is we're trying to be all in at 80%. To have 20% built-in equity that meets our cash flow numbers our positive cash flow numbers of what we like, and those differ depending on the neighborhood that we're in the Baltimore area or the DC area. And the reason that we want to do that and be at 80 cents on the dollar is I know that by the time I go and I buy a property and I renovate it and I do this and I do that and I do this, even if we're at like 65 cents on the dollar minus construction costs, or 75 or 70 cents on the dollar minus construction costs, when it's all said and done, my exposure is darn near close to 80 cents anyways. So save the time, save the headache. I'd rather pay a little bit more for a premium product that's already done. I don't have to deal with the heavy lifting because I'm spending time on other things. So I think there's the right opportunity for the right person. So if you're an active real estate investor and you want to acquire properties in the Philadelphia market to begin with, I'd certainly encourage you to reach out to Josh, even if you're flipping houses yourself, because this could just be a vehicle that you either buy it in cash or you get a loan for it, hard money loan or bank financing on it, and you just say, you know what, I'm going to be active in flipping, but I don't want to deal with the rentals myself. I'm going to have someone else deal with all these headaches. So I think, again, from what we talked about, there's a lot of different takeaways from this. So I certainly appreciate you being on the show. And until next time, thanks again.
All right, take care. See ya.